Joining us now, UBS retail analyst Michael Lasser. He has a sell rating, a $3.50 price target on the Bed Bath & Beyond stock. Michael, your thoughts on the announcement? Do you have faith in this turnaround?
The turnaround is going to have a low probability of succeeding, Sarah. There's a couple important takeaways from this announcement. Number one, the sales in the most recent quarter were down 26%. There's only so long that a retailer can withstand losing a quarter of its sales in one period year over year. Second point is, while they did raise additional capital, it's going to be very expensive and very dilutive. And keep in mind that the company burned through $325 million in the most recent period. If you simply annualize that, and we can argue whether that's conservative or aggressive, that would be about $1.3 billion a year, translating to about $15 a share of cash burn per share. The stock's trading right now at 9 and change. It's going to be a very precarious situation from here.
So what is the likelihood that you're saying this company could file for bankruptcy?
We're saying that what is going to determine the outcome from here is the shape of whether or not they can improve the sales trends. And what really turns the fortunes of a retailer is when the vendor community starts to lose faith in that outcome. And if they stop shipping goods to the vendor, that really accelerates the downturn. And there has been chatter that some of the vendors community has started to become more nervous about its pairing with Bed Bath & Beyond.
What about, I know Ryan Cohen is out, which there's a whole other question of what he knew when he sold out during the meme mania, Michael, but what about the case that he had, that there was a turnaround here to be had, that they could potentially spin off BBBY Baby? It seemed like the market was excited about that.
There's some value in BBBY Baby. It's a retailer that's an important component in the lives of new parents, but the lifespan that retailer deals with that customer is typically only 12 to 24 months out of their entire lives when they're in the market for those juvenile products. That makes it not an easy retailer to navigate through. The core business is under a considerable amount of pressure. So whatever what an investor might see in this situation, the facts are what the facts are, and it's going to be very difficult to turn around the business from here. The strategy is to try and bring back some national brands, to coupon a little bit more to drive traffic. Those strategies involve lower margins than the company has experienced in the last couple of years. So it's going to be difficult for Bed Bath & Beyond to have its cake, which is to drive sales, and eat it too, which is to stabilize its profitability.
So you think it's hard to tell if there are any fundamental investors really in this stock just because of what's gone on with the memes and the short squeezes. You have a $3.50 price target?
That's right. That represents 60% downside from here. We would start thinking about who has the potential to capture share in the event that Bed Bath & Beyond needs to continue to rationalize its store base. About 80% of those Bed Bath & Beyonds have a Target within 10 minutes, and Target stands to be a significant beneficiary of these challenges. In the event that it captures 25% of those sales, that could add 5 to 10% to Target's earnings next year. So that's another way to look at this situation.
Well, yeah, no, the proximity there in geography is pretty interesting with Targets and Bed Bath & Beyond. Michael,
no doubt. Good to see you, Sarah.
Yeah, you too. Thank you, Michael Lasser.